You're back to the show. Washington has expressed its displeasure with OPEC and its allies for blindsiding everyone to announce nearly 1.6 million barrels a day output cut on Sunday. That OPEC news was the first kick on the global market scene in the new week and the month of April. Let's get to China Minis, global market strategist and the managing partner at Howard Minis Asset Management in now for a chat to this. A good evening to you, sir. Thank you for connecting to us on the show. Let's get started on the big story. What's in the barrel of oil? OPEC decision, 1 million barrels of oil per day. If you put every other figures together, look at about 1.6. That rattled the markets. What's your take? It's a Monday. Talk to me.
Ian, I would thank you for having me, Boston. I would quietly want to say I think this has been orchestrated by the Russian administration. It was clear that Russian Novak, who happens to represent their petroleum minister, highlighted that there's a lot of market interference into stable market dynamics, and they are bothered with that. As we know, they feel that they cannot be at all point be disadvantaged at all side of the coin when it comes to their current situation. I mean, the war with Ukraine. So I think Russia is basically pushing Saudi Arabia to say, well, I mean, we want to do this, and it's a voluntary cut, Boston. It's not the agreed normal consensus that you get from OPEC and OPEC Plus. So it's voluntary. So member countries are allowed to decide to stay back and not participate. It just makes it very, very, should I say, unorthodox. So you can't really point fingers, really, according to the plan, Boston.
But how are the global markets moving forward? That's as far as OPEC is concerned. But again, we've got a backlog in April, so we've got to deal with the outcome and the leftovers of Silicon Valley Bank mess and the UBS takeover of Credit Suisse. Investigators says they're looking into this deal to find out if anything's gone wrong with Credit Suisse. Thousands of jobs are likely going off. So it looks like it's not a blue ocean yet.
Yeah, I mean, Boso, it was very clear that the market mechanics, if you would say, is actually strained. We understand that, I mean, for years now, it has been over leveraged, it has been dysfunctional. And that's what we're seeing a lot of this, should I say, precipitation. That's what we're seeing with SVB, or we're seeing with Credit Suisse now. Also, I think right now, central bankers and government alike would not allow any form of contagion risk sort of blow out of proportion, and that's where we're seeing a lot of aids and financial tools being put out there, forced merger and acquisitions. We're seeing with UBS and Credit Suisse. This is what they would continue doing, because they understand that the downside risk is enormous. It can be very exponential, and I think they're trying to avoid that.
Well, how is the crypto market reacting to the latest developments around rising inflation, rising interest rates, but sluggish growth among developed economies out there, the US, Western world, and China, if you add that? Again, we saw that rush into Bitcoin in the wake of those knee-jerk reactions to when SVB issue came up, as well as Credit Suisse. I was still seeing Bitcoin and his colleagues or his cousins, as it were, still making those right. At what levels are we looking at these cryptos right now?
I mean, from a technical standpoint, I mean, the cryptocurrency all through 2022 have been in a depressed state. So even if you want to keep the fundamentals aside, maybe the news, the optics driving the pricing, technically speaking, there is just at some point people will take their profit. And that's what we're seeing now. We're seeing that sort of bounce. However, when we shift to the fundamental side of things, also, it's clear that when there is this level of stress in the financial market, investors and market participants don't expect tightening, aggressive tightening from central bankers. And when you look at that squeeze of liquidity, which has sort of driven the bearish tone in crypto, what you're seeing now is people just going and front-running the fact that the central banks would continue to sort of slow down their hiking, or maybe even start to cut. You know, some of these guys are already discussing that they can cut cut interest rate if things continue to get bleak, So I think that's what we're seeing in the crypto space. Individuals, market participants are just going and anticipating that there will be more free money. Liquidity will sort of be eased into the system, and that would just translate to Bitcoin. Bitcoin and other digital assets have literally been driven by liquidity, boss. So every other thing is noise.
Yeah, I know. But again, everybody were running helter-skelter last month and trying to look for a safe haven. Where did you hide? Did you buy gold? Which did you buy crypto? What did you buy?
I'm sure at some point you realize that I'm not a fan of the digital assets. So the precious metal gold has always been a king in this kind of space.
Yeah, because I saw some folks were saying, hey, look, a lot of noise last month. I'm sure you know everybody's trying to find their way of the mayhem that's SVB brought, and then again you talk about say, oh, bitcoins and cryptos are safe havens, and some folks say, oh no, they are not safe havens. I'm not going to buy them. I'm going to buy gold. They say, no, don't run to gold. Just grab some Bitcoin so the prices go up. But now it looks like we're all down. Okay, so we've got a number of central banks raising interest rate, the big boys in the manner of speaking, the ECB, the Bank of England, and the US Fed. So what are the biggest risks right now in the market at the moment, and how are you traders positioning against them? We're starting the month of April. It's the second quarter of the year. What's on your radar?
I mean, what market participants are sort of looking at is more of seeing if this possible contagion effect has actually been plugged by the central bankers. We're seeing risky assets sort of trading higher compared to how aggressively they fell on the back of this news. And I think that's what market participants are looking at the moment, trying to understand what the central bankers are sort of tilting into. And I think that would now drive what portfolio managers and the strategy would look like going into Q2. But I think for now, it is more of cautious approach, trying to understand what the bankers, the Apex bankers are doing. At the same time, just seeing that, well, the market are not too strained for risk taking. And I think that's where market participants are, Boston.
Okay, so let's begin to sum up around back to the OPEC story. The big boys are making very big cuts, as it were. It looks like everybody wants to get some level of stability in terms of price, as it were. So Goldman Sachs quickly on Sunday issued an investment note and said, look, we're looking at May delivery for Brent at about 95. June delivery will be around $100 per barrel. What's your take? Where do you see oil? Remember, Goldman Sachs just about a month or two ago revised downward from 100, and it goes back to 100 again.
I mean, Boston, they're just right now the path of least resistance is upwards when it comes to oil. So aside the fact that fundamentally OPEC and OPEC Plus are doing this voluntary cut, if you would call it, technically that is where prices are looking at. So I think I'm in agreement with Goldman Sachs. I think we will see oil trade into the $100 region, maybe a bit higher, maybe about 110, 115, 122. Yes, I know that might sound very aggressive, but I think it's in a place to have another bullish run into 2023, Boston.
Okay, great. I'm sure we'll have a whole lot to talk about as we move on the rest of the week and the rest of the month. Thank you so much for your time. We really appreciate it. Thank you so much. It's great sharing your thoughts and insights with us here tonight. We appreciate it as always. Switching the minutes of Forward Asset Management.